back to Good Morning San Diego. San Diego's real estate continues to undergo some significant changes. Joining me now to discuss the latest movement on the issue is somebody who really knows it. He lives and breathes it. Jim Bottrell with the Jim Bottrell Real Estate Team, who is now pretty regular here on KUSI, and for that we are grateful,
It's been a couple of years now.
Thank you for that.
A lot of fun.
All right, so what are we seeing? Give us the bullet points, and then I'll ask my questions. What are the changes that we're seeing right now?
Well, big thing happening right now is later on today, the Fed's going to determine whether or not they're going to reduce the Fed funds interest rate. So that will maybe have a trickle down into the mortgage interest rates. So
if they kick it down quarter point or whatever it's going to be,
yeah, that's when we're the
how long before it affects your world? Well,
it's funny thing is it's already happened. So mortgage interest rates and the Fed funds rate are actually different things. So people need to, I'll give a quick brief of what that is. So what the Fed funds rate does, what they do is they're actually controlling the interest rate when banks lend money to each other, the overnight interest rate. All right.
Got it.
And that is one of the ways, and it's oversimplified example, but that's how they control the economy. They speed it up or slow it down. So if they increase the rates that banks loan each other money, well, that increases the bank's cost of doing business, and that trickles down to the consumer who pays that through car loans and mortgage loans. All right. So if the Fed wants to tighten up the economy, slow things down, well, they just raise those interest rates, and people are disincentivized to borrow and spend. And when they lower those things, they're telling people they're incentivizing them to borrow and spend. But that takes time for it to trickle down to mortgage interest rates. Going back to your original question, when does it take? If the Fed does 0.25% today, it's already happened. It's already baked into the mortgage interest rate. So over the last several months, we've seen interest rates come down about 0.75%. So we're seeing, again, I'm not quoting rates, but I'm seeing conventionals in the mid-6s. I'm seeing VA loans at about 6.1 is what I've been seeing. But that all went from, remember, 8% last year with zero Fed funds changes. So it's already baked in. Now, if the Fed goes crazy and starts doing half or 3/4, then we might see some differences.
But for the people, though, that took advantage of the craziness we went through and have mortgage rates in the twos, high twos like yourself, high threes.
Low twos.
Or low twos, excuse me, I'm sorry. Because we got nuts there for a while, right?
Did.
All right, so that's a big jump if you wanted to say you want to buy a new home. You don't want to give up your mortgage rate, do you?
No, so I've been saying for, I don't know, about a year and a half now, that the people that have those super low interest rates, they're dug in like an Alabama tick. They're not going anywhere, all right? I used to love my home, but now I love my interest rate. They're not going anywhere. Made her laugh, that's funny. She's choking on her coffee. They're not going anywhere. So what we have been seeing this year, though, is there are people who are being forced to sell their house. And that's always what I call, it's the fringes of the society, it's the vulnerable populations. I've noticed my listings in 2024, the percentage of those people is up dramatically. So these are people that, maybe their parents passed away and they have to sell the house, they can't keep it, or there's divorce situations, they can't pay for it, so they have to give it the low interest rate, or
leave it down.
For whatever reason, they're forced to go. Or what we've been having a lot of listings are like hoarder homes and houses in really bad condition where they can't make the payments. That's the fringe of society, the vulnerable population. That's ticked up quite a bit. But the mainstream person that likes to upsize, we had kids, we want a bigger house, or downsize, the kids have moved out, that hasn't been happening.
All right, so with the increase in inventory usually comes more competitive pricing. Is that also part of this conversation?
Right, so that's one of the things I was going to talk about is one of the advantages right now is what we're seeing is, this is my fifth presidential election cycle. So in the last 90 days of every presidential election cycle, people tighten down. All right, they just don't do much. Not much happens in real estate. And we're at 50 days, and we have very opposing people this time. I mean, there's two different ways this can really go. So we're not seeing a lot. But what we have seen is we have seen a slight tick up in inventory. And while there's not enough ability for the buyers to really negotiate a price, what we have seen is the buyers are able to negotiate terms with the sellers. So we're seeing the sellers give a lot more concessions, like paying all the buyers' closing costs or paying for a 3-2-1 buy down or something like that. We've seen that. The prices haven't moved, but we are seeing more concessions. And that's the first thing that happens. Now,
all right.
go with your next question is going to be.
No, I just want to know. So then look further down the road. Take us into 2025.
Okay, so 2025, that's a great conversation because I see our economy. I'm a numbers guy. I love economics. I'm a geek when it comes to that stuff. I look at our economy as a tipping point. When I see that vulnerable population becoming a large percentage of the number of listings that I get, so that tells me that's the fringe of society being forced to sell their house. That tells me we're at a tipping point We could go hard one way or we could go hard the other way. And I do not think that that is set in stone yet. I think if we have the right people in office that make good economic policies, I think that we have a chance of a very, very strong economy. And I see that people, jobs creation goes up and interest rates come down. On the other hand, if I see the wrong policies, I can see that vulnerable population we're being forced to sell start to move into mainstream. And that's when we have problems.
And on that alarming note, well, I guess it's all eyes on the election in November.
Yeah, everybody's got to vote.
All right. Thank you very much, Jim. AMI